If this line were to hold, be technical when it comes to open interest. If this line were to hold, then we're going to explode because the election's over. There's no reason to buy gold in a panic now. But if this open interest line holds, that would be amazing.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's morning market rundown, we'll be discussing gold open interest, Trump and Musk, their moves, and a couple other things. Let's start with the markets. The dollar is down 3.5 at 105.92. 10-year yields are down almost 2 basis points at 441. S&P 500 down 9 handles at 59.76. The VIX is 15.13, up 43. Gold is up 12 on the highs of the evening, 26.10. That's good. Pre-CPI, we'll discuss that. XAG, silver, 30, spot 91, up 22. In case you're wondering what the X is all about, X is what goes in front of a currency. X, US dollar. X means currency. XAG means silver is a currency. XAU means gold is a currency, et cetera, et cetera, et cetera. XCU, which isn't a currency. I don't know why they do that. 412, down a penny. WTI, 68.43, up 24. Natural gas, 263, down 4.5 cents, 5 cents. Bitcoin, down 153 to 87,860. 89,000 and change was the high. Ethereum, 3165, down 83. Palladium, up 7. Dead cat bounce, 953. Platinum, 948. Look at those two now. Palladium is over platinum. And if there's no more news out of Russia, maybe you just buy palladium if you're bullish platinum, because it's kind of like you buy silver if you're bullish gold. Gold, silver, weaker as the markets drop for the last couple of days. Won't always be like that, but it is like that right now. Grains are, there's CPI for you. Soy is down 3, corn is unchanged offered, and wheat is down 5. And you can see the prices right there. There's CPI for the last, I don't know, 14 years. And here we are right here, and it's probably going to uptick a little bit more. That's actually the basket of goods. It's not CPI, but it's pretty much the same thing in terms of the shape. Let's get to our work. Some housekeeping. Good morning. I'm reading my own notes here. Had a long, fun discussion on Enbridge about a week and a half ago with Tom Luongo. He shared it with his subscribers, and I'm sharing it with you guys. If you like Tom, you want to listen to this, that'll be emailed out today. There is, and that's going to be unlocked. There will be a locked bonus as he and I had a frank discussion on why Jethro Tull sucks compared to Led Zeppelin. And of course, he takes the other side of that argument. So that's premium. It's not finance, but it might be interesting to you. And I also recorded an in-depth conversation with Peruvian Bull yesterday. He's a big influencer on Twitter, also a very good macro analyst. And we discussed gold, silver, and Bitcoin in context of everything that's going on governmentally as well. And today I'll be sitting with Andy Scheckman going over markets. That'll be very fun as well. All right. You have to keep busy to avoid thinking about the fact that gold's lower. So today's discussion, CPI and gold open interest, Goldman CPI commentary. All right, where are we? Here we are. I'm out of my mind today. Right? Metals under Trump Musk. There's the stories. Let's go a little bit faster. Right? Discussion, CPI expectations. Headline CPI is expected to rise by 0.2 in October, matching the prior month's pace. Analyst expectations currently range from 0.1 to 0.3. What does that mean? It means we're expected to be, everyone has a good idea, a good handle what they think it's going to be, and it's expected to all be a little bit higher. With regards to the market reactions to that, well, the market has had such a nice run up that unless you get some really low CPI, you should expect the market to not care. Right. So the risk, I think traders are looking at the risk as they're a little bit worried about a higher CPI. So if it spikes a little bit higher, then the market is vulnerable. I don't know how true that is, but that's what the smart banks are saying. They're like, okay, take some profits, which is why the S&P is down 7 handles today. what happens the rest of the day, who knows? But we'll see about that. And there's a CPI chart. I put a little arrow where we're expected to be, and the rectangle. So there's your little bit of an uptick. Is it a resurgence? Well, that's the concern. If it is a resurgence, if there are fears of a resurgence, then why would that knock the market down? What's the big deal? The big deal is the market is already pricing in all these cuts in 2025. And if there's a little bit more of a resurgence, then they'll rug pull themselves saying, oh, Powell's not going to cut. And they'll sell their stocks. And, Powell might not cut anymore. I mean, you've got Trump in office. Who knows? Okay, so there's your chart. Open interest tells you this is different. We're talking about gold here. And this chart is from the original chart is from Blava. He's a GoldFix founder and contributes heavily on Sundays along with the other crew that shows up. So this chart, just to give you, here's the basics of it. What are you looking at here? You're looking at the gold line is gold price. The red and blue lines, don't look at the crossing aspect of it. Those lines in connection are the open interest going up and down. So the left scale is the open interest. The right scale is the GLD price, not gold price itself, but the same idea. So that's your clean chart. And what you'll notice, what you may notice is that open interest goes up, the market goes up. Open interest goes down, the market goes down. And that's because the futures market, not the investors market, the futures market is dominated by speculators who start by getting long and then get out. I'm bullish, they buy it. I'm not bullish anymore, they sell it. They don't start by saying I'm bearish. That happens in silver, okay? It's another conversation. So they start by getting long and then they puke, which is what we're in the middle of right now. We're in the middle of a puke. So I'll draw your attention to some patterns that are very constructive for this market. Now, it so happens that over the last 2 years, especially the last year, which is what we're showing here, this is like the last year from November of 24. I mean, it's from November of 23, sorry, January of 23, whatever, November of 23, sorry. It so happens that, generally speaking, as the open interest gets, as I mentioned, the open interest peaks in the market, the open interest drops as everyone sells and the market comes off. And then the open interest bottoms and the market bottoms. So the market would do this forever. Makes a high, puke, makes a high, puke, makes a high, puke. But now it's doing this. Makes a high, puke at a higher bottom. Makes a high, puke at a higher bottom, right? So the market keeps making higher highs if you're not a technician. I'm saying this if you're not a technician. The market keeps making higher highs as the open interest bottoms. Now, the open interest is also bottoming at higher highs. So look at number one. The market's down here, the open interest bottoms there. Those are the purple lines. Number two, the market's here, which is higher, and the open interest bottoms here, which is higher. Okay. Number three, the open interest is higher on a bottoming higher, and the market is bottoming higher. Number four, same thing. Number five, same thing. Number six, where that's the question mark. Is this the bottom? I'm not going to say that it is. Pre-election, I would have said to you it's the bottom, because this is what happens. People are, remember those lines I showed you that kind of steepened? This is people getting in. Higher lows, higher highs, higher lows, higher highs, higher lows. Like, okay, the end of the world's coming. The end of the world doesn't come. And so they puke. Now, if this, pretend there's draw a line, you can draw a line here, right? If this line were to hold, be technical when it comes to open interest. If this line were to hold, then we're going to explode, because the election's over. There's no reason to buy gold in a panic now. But if this open interest line holds, that would be amazing, because that would mean all the people who bought before the election, not as many as I thought were buying just because of the election, which would mean China's buying at higher levels, et cetera, et cetera. So if this theoretical line that I'm making here breaks, well, then it should tell you that the market's going back to a normal area. Well, what's normal? Well, it's still higher highs. It's not going back to 1800. So what do I mean by that? Let's zoom out a little bit to give you an idea of what the market used to be like, right? Right. This is the same chart zoomed out to 22. Okay, so take a look at this. Generally speaking, just look at the gold line. high, low, in a range, high, low, high, right? So higher lows, but still, pretty much in these two lines down here, like this, right? And the open interest gets really high, everybody pukes, and really high, and everybody pukes. And this is 22. Remember in 22 when the Fed started raising rates? Everyone in the US got out of gold. Everyone out of the pool. Boom, and gold dropped. And investment interest in the US dropped. But this is all as China was buying. China was buying as we were selling. And duh, look at where the market is now. All right, so the reason I have these arrows here is because now we already looked at the higher lows. See this over here on the right? Higher lows, right? That's that chart. Right, but now we're zooming out and look at how high open interest can get. Last time open interest was this high, the market was down here. What's that, 1750? The last time open interest was this high, the market was peaking at, what's that, 1900, 2000, right? Now, the open interest is peaking here, well below these two areas. The open interest is peaking here, well below these two areas, and the market is continually ratcheting higher. The floor for gold is higher. There's no one who wants to sell 1700 gold anymore. Producers, for the most part, are probably hedged. Like they don't have any more gold to hedge. They probably hedged in 22, 2300 for the most part. That might be one of the reasons that miners are underperforming, right? Bullion banks, because they don't have that production that's being constantly hedged, they have to buy a little bit higher because underneath them is the BRICS, central banks, Eastern central banks. The US is probably buying too. And so the floor keeps raising, which means that you have these ceiling spikes raised, but they don't want the ceiling to raise. And that's where the BIS comes in to keep it capped. Anyway, so there's an idea. This is a different market. Okay. Do you get, will it go back to it's not going to go back to the old days. Okay. It's going to go back lower, right? The chart that I showed you before, but there's no old days. This gold is like the bond market now, right? So now you have to think about, how much is the market already discounted? So that's it. That's the hand holding for today. It's been a rough couple of days. News and analysis, metals under Trump and Musk. That's a post we did. Money digitally speaking. That's a CIO of a tech firm, very digital money oriented, and uh, he doesn't compare. It's not like if you're a gold person, like gold sucks. It's not like that. He talks about the possibility of money, very, very hypothetical. And he has a little section here about gold. He's like, why is gold money, et cetera, et cetera. It's a nice read. The New Golden Age of America. That's an op-ed out of the New York Sun. Very good. That's unlocked for people if they want to see that. All right, moving on. Trump Musk moves. I want to read these just to, we're paying attention to them. Some people are happy, some people are unhappy, but here's what they are. U.S. President-elect Trump picked John Ratcliffe for CIA director and will nominate Peter Hegseth for defense secretary, while it was also reported that Trump told allies he wants Robert Lighthizer as his trade czar. I don't have a strong opinion on that. Trump said Elon Musk, working in conjunction with Vivek Ramaswamy, will lead the Department of Government Efficiency, DOGE, and aim to dismantle government bureaucracy, slash excess regulations, cut wasteful expenditures, and restructure federal agencies. Now, making a cartoon out of the government, well, if you're a traditionalist, as probably many of us are, you probably don't like that. And I understand. If you are a libertarian who's like, yeah, government's a clown show, let's treat them like they are, I understand that as well. But look at what happened in Argentina. Argentina was the test case. You look at Argentina and the U.S. is connected again. Argentina was like, oh, it worked down there, right? He goes out there with his chainsaw and all the drama there. Well, they're going to do that here. Next, Punchbowl News notes that the GOP is planning to pass a major tax bill in the first 100 days. This is material of the new presidency. Sources add that conversations between Republicans from the House and Senate budget committees yesterday were largely a big picture discussion about what Republicans are looking at for reconciliation. I don't know the dirt of it yet. I haven't read it, but everyone in the markets thinks that Trump's going to spend more, right? Everyone thinks he's going to use tariffs. He's going to try and reduce taxes. Let's assume he does all those things to a degree. But what got the Senate and House Republicans elected was in part the inflation, and they want to stay in power. So the spending may not be as big as people think. Just keep that in mind as a little bit of a red herring. Wall Street investors Scott Bessent and Howard Lutnick are the leading contenders to be Donald Trump's Treasury Secretary after hedge fund billionaire John Paulson dropped out of the race for a job. That's an alarm bell for me. I would rather have John Paulson, who is a conservative, who is a serious man. Scott Bessent, I don't know him at all, but I think he's got a lot of influence over Trump right now. Howard Lutnick, I happen to know his pedigree. He's the owner of Cantor Fitzgerald. That was the bond brokerage firm, one of the biggest bond brokerage firms on the street, if not the biggest. That lost most of its employees in 9/11, and that put him on the front page. And he's well known in the industry. Scott Bessent, I don't know him at all. And John, you may not remember this, but when Trump won the first time, he wanted someone named Vincent Viola on his team. And Vincent Viola is a serious man who used to be the chair of the NYMEX, investor, businessman. He is involved with with an algo trading firm, Virtue, and he was being considered, and he dropped out. I don't. That's an alarm bell for me. That's just aside, right? That's an alarm bell. That means that somebody out there, in this case, John Paulson, doesn't want to work with Trump. And Paulson's a smart guy. Just he might not be doing it because he wants to trade or invest or he wants to take advantage of Trump's policies, but it might be something else. Who knows? All right, just be aware of that. CPI, PPI, and there's more from Goldman at the bottom. Quick comment on the markets. That's a monthly. Ugh, we don't want to look at that. Let's look at the daily because it looks a little bit better, right? So I don't have my lines up on this chart, but you get the idea. The idea is that we broke, remember that speed line starting, going up. We broke this really crazy one here, right? Right. And now we're in this one and we broke that, but we're in between this line and that line. So 2,600 could be an area that we stay at for a while because there's probably significant open interest there. Knock on wood. We want to see the open interest. If you're looking at that open interest chart, you want to see the open interest drop, but the market not. That'll tell you that the puking is continuing, but someone's catching the knife very aggressively, and it's probably going to be a bullion bank. All right. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.